no single strategy. I think it's much more important to view this as part of the opening up of China to international capital. So there's going to be a lot of stock-specific stories, issue-specific stories coming through over the next 12 months, and we've got to look at them with fresh eyes as part of the restructuring of China. So it's much more, it's not a single strategy.
So talking about restructuring, we've got the SOEs all under reform. Are there going to be options there, opportunities there in the A-share market, for example?
Absolutely. One of the reasons people haven't bought into China as an equity market is because it has got these old China stocks that haven't reformed. As they reform, they will throw up opportunities like any privatization that we've seen anywhere else in the world, that you'd have not bought BT beforehand, now you'd have bought BT on the privatization. So it's the same kind of opportunity set if they get it right. But it just doesn't mean just buy everything. You have to see if they are genuinely restructuring the balance sheets, restructuring the way the management, spinning off divisions. And I think they will do, but it'll be very issue specific.
All right, now we're still waiting for the details of how it's all going to work, but it's going to open up the Hong Kong market as well to mainland customers more openly. So what about here in Hong Kong? What do you do here?
I think one thing is worth pointing out, it's going to be quite clunky at the moment. The details are still a little bit clunky, and so it's not going to open with a big bang. I think there'll be sort of a tentative approach. I think mainlanders will be interested in buying stocks, Chinese names that they can't buy as A shares. So I think there will be some interest and some flow, but I don't think we can expect that to push prices up to crazy levels. But I think it's important to recognise this is going to be a little bit of a slow starter, I think, because there's a lot of detail. This has happened very, very quickly.
Right, and it's a big rush to that October deadline. Now, if you look beyond this, beyond the short term, what do these reforms signal for what's ahead for reforms in China?
Well, it's a full 21st century financial market is being built in China, and it will be dominating the region over the next 5 years. Bond markets, it's suggested $20 trillion worth of debt is going to be issued by those SOEs, by the local governments. And what I'm saying to people, my clients, is your portfolio will have things in it in 5 years' time that don't even exist right now. Infrastructure bonds, local government debt, former SOEs. So there's a completely new financial market is going to be being built over the next 5 years. And this is the first start of it, first part of that process.
All right, Mark, thanks so much. We'll leave it there.
Pleasure.